All right, good morning. My name is Jeff Yu. I'm the founder and CEO of Monochrome. We are a Bitcoin ETF investment manager for the Monochrome Bitcoin ETF and the Monochrome Ethereum ETF. Today I'm going to talk about something cool, something themed to this conference with like a lot of the crypto people here as well, and also some of the institutional people. So it's about interoperability of Bitcoin ETFs and crypto exchanges. I bet you never heard of that before. Bit of a background. So I used to run crypto exchanges, and now I run Bitcoin ETFs. So I do have that sort of perspective from both ends. Some people remembers me as the founder of Binance Australia. I started Binance Australia, in 2018. Launched that in 2020, close to 2020, right into the bull market. And then I started Monochrome a couple of years ago. Fully committed to building, and now we have the first direct spot Bitcoin ETF and Ethereum ETF in Australia. So what is the difference between ETFs and digital currency exchanges? Both are ways for people to get exposure to Bitcoin, crypto, that sort of thing. I think the biggest difference is that people don't realize is that in Australia, ETFs are regulated. So there's regulatory guidelines on how custody, insurance, price tracking, benchmarking, all the stuff, all the security and things like that. Whereas in digital currency exchanges, as you guys might have heard, the Treasury is still trying to form how to regulate them. So in other words, crypto exchanges are not regulated in Australia, despite the image that some of them portray that they might be, because I run both, so I know the space very confidently to tell you that it is this way. So a bit of history timeline in terms of how we got here. ASIC, which is our Australian Securities and Investment Commission, pretty much like the Australia version of the SEC, came up with a consultation and also subsequently the guideline for crypto ETPs, exchange traded products, which an ETF is. So that was released in October 29 of 2021, so about 3 years ago now. So it took about a year, 9 months specifically for Monochrome to get the authorization for the Monochrome Bitcoin ETF and also the Monochrome Ethereum ETF, and about a year after we launched the application. So this year in June we had the launch of the IBTC, which is the Monochrome Bitcoin ETF, and subsequently, like a month ago, we have the Monochrome Ethereum ETF. So what is IBTC? So IBTC is a ticker for the Monochrome Bitcoin ETF. People can access it through the brokerage platforms like your ComSec, Superhero, NabTrade, that sort of stuff. So it's pretty much easy access to getting exposure to something like that. And I'll tell you a bit more what's cool about it later on. So same thing with Monochrome Ethereum ETF, ticker is IETH. So they are both the first and only spot crypto ETF that supports in-kind subscription and redemption. So what does in-kind subscription and redemption mean? You guys familiar with like DeFi, when you wrap like say ETH into WETH or BTC into WBTC, it's kind of like that. You'll be able to put Bitcoin into IBTC and take Bitcoin out from IBTC. You can't do that with any other Bitcoin ETFs in the world. So certainly not in the US, certainly not the other Bitcoin ETFs in Australia. The reason why we do that is simple. We see Bitcoin ETFs as another layer of DeFi on top of the crypto space. Crypto has a lot of wealth in it, but what it lacks is regulation and protection. So you don't have a lot of institutional grade custody, hedging strategies, options trading, leverage, all this kind of stuff that all kind of hidden behind the wall to Narnia, right? But you need a cupboard to enter it. So traditional systems can't access Bitcoin directly or crypto directly in its native form, on-chain form, but they can certainly deal with that once it's in a security form, which IBTC and IETH is. So one cool thing that we've seen people starting to do is moving their crypto from crypto exchanges into the ETF. And the cool thing about this is that the way that we set up the trust structure for IBTC and IETH, it doesn't trigger a capital gains event when you move in and out of it, assuming there's no change of beneficial ownership, but the beneficial owner of the crypto and the ETF holding is the same person, the same entity. So what's cool about Bitcoin? What's cool about ETFs in general is that it is governed by licensed entities. Like it's in a different world than what crypto is at current sort of speed in terms of regulations are still forming to regulate them. There's very little practical investor protections that can be enforced. We've seen FTX. People lost money. No one in Australia is punished for it still today. That's kind of stuff won't happen in a regulated world. preventive and reactive mechanisms are in place to secure investor interest that just doesn't exist in the crypto world today. So the Monochrome Bitcoin ETF and Ethereum ETF is we got obviously Monochrome behind it. We have State Street, which is a large tier one, beyond tier one institutional bank as the cash custody and fund administrator. We got Atomic, which is a share registry, very common here. We got CF Benchmark as a benchmark provider, and Gemini as custody. The other thing is people, this weekend I've been hearing a lot is debanking. So when people send money, what is debanking, right? It's like when you send money to a crypto exchange, you either get limited pretty heavily, like 10K a month and kind of stuff like that, or you just get your entire account closed. We've heard sort of horror stories of people missing out on the bull market because their funds are still frozen from the bank from just trying to send it to a crypto exchange. With an ETF, you don't have that problem. Why? Because you basically buy an ETF using your brokerage account balance. You transfer your, $1 million, $100, whatever it is, into your ComSec account or your superhero account, which you can, well trade other shares like BHB and anything like that. But in this case, just, you can choose IBTC and IETH. We've never heard of anyone that has problems doing that. So we've seen trades from a single unit, which is about $15 at the current unit price, to largest single trades like $2 million. So that kind of thing won't happen anymore in crypto exchanges. You can't even transfer 100 grand to them anymore these days with much sort of a risk of not having the banking issue that you face. And then the cool thing about what I sort of touch on a little bit on like why I think Bitcoin ETF is like another frontier for DeFi is because you are able to access traditional finance instruments. The TradFi things are more heavily regulated. There's more institutional grade mindset, what you want to call it, into it. So we've seen people building products on top of IBTC, despite it's so new. Things like structured products that has sort of like high leverage and things like that, and to some sort of options that banks are providing. Banks like Standard Chartered, CSL, and Macquarie, and all these people are providing options on top of IBTC that most people probably don't even realize. And also loan products. People are able to take a loan out against the IBTC shares through lending providers around Australia. I believe it's all wholesale only at this stage. But these are cool things that we're seeing people do. And because TradFi systems have all the systems in place for years and years, it are battle tested. Everyone knows the space and how it works pretty well. And right now, they just have a new instrument to be able to access it. So they are able to tap into the crypto wealth to be able to offer them, things that are commonly offered in the traditional world with higher regulated and higher investor protection. But also, crypto people can also access these products without having to only deal with cowboys, right? Because if you want to say, do something with your crypto, most likely you're sending it to another cowboy, and another cowboy is loaning that stuff to another cowboy, and then the whole thing unwinds like Celsius, BlockFi, Three Arrows. You all know the story here. Whereas your counterparty in the in-store world, these are like the Macquarie banks, your Standard Chartered, your CBAs. I would say that the risk of that stuff happening and unwinding is very, very much lower. So a bit of how to do that, and people are sort of figuring out at this stage is it's pretty easy to transfer Bitcoin or ETH into the corresponding Bitcoin or Ethereum ETFs. Again, only the Monochrome one will work for this. There's no other ETFs in Australia or around the world that you can do that without triggering a CGT consequences. So submit a transfer request, and then onboarding with a share registry. Obviously, because it's a security, it needs to be held under a SRN or a HIN, which can be all done through a share registry. And then you just transfer the Bitcoin into a Bitcoin address in a custody wallet, and you're done. The units will be issued the next following day. So that's pretty much a little bit of cover of that. What is interoperability between Bitcoin ETFs and crypto exchanges work? Like I said, I've run the biggest crypto exchange in Australia, Binance Australia, to now the most regulated crypto company in the country, pretty much running Bitcoin ETFs. So if you guys have any questions, we still got about time for a few more questions. So open up to the floor if you wanna chat. All right. If no questions, oh yeah. I think right now, Solana ETF, we've been thinking about it, and we've been researching it, how to do it properly. So in Australia, ASIC governs what crypto assets can be included into a license. So there's two kinds of Bitcoin crypto ETF in general. One that holds crypto directly, and one that holds it through an intermediary structure or what is known as feeder funds. So with feeder funds, you can probably put a lot more legs into it. You can put in things like that because the look-through of the asset on a feeder fund is shares, not crypto. But with a crypto ETF, the look-through asset is crypto itself. So we are pretty adamant on doing things the pure and the right way, which is that the ETF has to hold the Bitcoin directly. There are parties out there that has launched feeder funds that markets themselves as crypto ETF, which we heavily disagree on. It's a bit of an ethics violation for my book. But I think for us to build a Solana or any other crypto ETFs, it has to get ASIC's blessing in terms of what asset goes into the licensing category. I hope that answers your question. Yeah. Sorry. The question is that you can use Macquarie. Yeah, so I believe the question is about you can use like Macquarie Bank and stuff like that to do trading of the ETF. Sorry. Yeah. Yeah. So there are some brokers that are still not fully open towards Bitcoin. I would say 99% of brokerages in Australia would be able to access it, like CommSec or NabTrade, Superhero. But there's some of them restricts them to sophisticated investor only. Some of them just don't want to touch it. So I think Macquarie is pretty funny. Macquarie Retail don't have the connection into it, but Macquarie Institutional, which is into the trading desk, trades it. So it's a bit of I think it's a matter of time before they will open it up further. But for most people, we've seen CBA, CommSec is the most prevalent in terms of flows, and then followed by CMC Markets, Interactive Brokers, and then you got the discount brokerage like Superhero, Stake, etc.
Can you talk a little bit more about the margin loan product and how that works, please?
Yeah, so if you probably hear, you've probably seen people saying that they do crypto-backed loans. So crypto-backed loans in Australia, it's a bit of a tricky thing. So when you pass the act of passing collateral over to another party where you no longer have legal control of it is technically viewed as a disposal event for CGT purposes. So what it means is that if you bought Bitcoin really cheap and now you post that $1 million worth of Bitcoin as collateral, your capital gains tax is assessed at the spot. So in securities lending, there is exemptions around capital gains when the act of passing collateral. It's under what is termed the Australian Securities Lending Agreement, as the S in the securities stand for, has to be something like a Bitcoin ETF. So we've seen providers and lenders out there wrapping IBTC as a eligible product to get exemptions from passing collateral to trigger CGT and things like that. So the whole chain will be like someone has crypto on, say, crypto exchange, moving into IBTC, wrapping into the IBTC without a CGT tax consequences, assuming there's no change of beneficial ownership, using that to then leverage to get a loan out without also triggering a CGT event. So the whole process is pretty much seamless from a tax perspective. And you only get this kind of tax clarity when you're in the institutional world, not in the crypto world. So we've seen terms where people borrow out 70% against LVR, 70% against IBTC at a mid sort of 6-7% interest rate. So you can set that the fees are much lower than the crypto direct back loans because the risk for the lender is much mitigated because there's very little custody risk that they got to deal with and things like that. The unwinding of options and things like that is so much simpler in the traditional world than in the crypto world. And most importantly, it's a tax clarity for the end user. So that wouldn't have happened without the ETF. Thanks for the question. Yeah, so question is whether we're going to build ETFs that has like top 10 assets, like a mixed ETF. I think that's a great idea. We've spoken to this with the team at length. So what we can do, and in fact what any investment manager in Australia can do, is that they can build a product that buys underlying IBTC and IETH plus, say, MicroStrategy plus Microsoft or whatever that has Bitcoin-related companies into one stock. It doesn't have to have a really high barrier as launching a crypto base layer ETF like IBTC and IETH, just because that these funds only hold security. So we might look into that next year, but I'm not surprised if someone is already starting to build stuff around that behind the scenes. Yeah. Custody. So custody for a Bitcoin ETF, you have to appoint a regulated custodian that ASIC has to approve in the license, and also from the product perspective, the stock exchange also has to approve when they admit the product. So in crypto custody in Australia, we don't have local crypto custody license per se, but so what ASIC did was that it allowed for international custodians for crypto that are regulated in tier 1 jurisdiction, what ASIC views as regulatory equivalents, to be able to admit them into the program. So Gemini was the pick that we selected during our vendor selection process about 3 years ago, just because that they were already working with CBA. A lot of their framework has been converted for Australia use. So the more specific stuff like the Reg Guide 133, which talks about institutional custody requirements, net tangible asset, audit requirements, and things like that. So it's a very different layer of, say, just using a crypto exchange or a crypto exchange using Fireblocks. So it's an entirely different sweep of regulatory oversight on what can be emitted. Because frankly, if you look into all the crypto ETFs, even before the US, there's tons of them in Europe and things like that. I don't believe that any single crypto ETF-like product has lost a single cent of Bitcoin. Whereas with crypto exchanges, like people lose hundreds of millions or billions of dollars collectively a year through platforms, through DeFi, swap platforms, and all this stuff, or private wallets. Frankly, just people just don't have the ability to handle that sort of level of security for most people that are not really full time into the sort of tech security space. Yeah.
Just a question, yeah. I know a couple of super funds offer like these alternative asset portfolios. Do you know if anyone's looking to, consider adding in stuff like IBTC, or have they even added it already?
Yeah, so my view on super funds is that I think the policy for Your Super, Your Future killed innovation for super funds. Because the Your Super, Your Future thing is basically a publicly name and shaming the top and the bottom performer. So I think the unintended consequences, or some people might say that it's an intended consequence, is that so all the super funds just walk slowly together, right? It's like if we cross as long as we cross the finish line the same exact speed, because if you look at super funds, generally they perform generally 8-9% per annum over 10-year period. Like that's barely beating real inflation. So if you're talking about a returns perspective from a super fund, like technically they're not doing anything wrong with your money, but again, you're not growing your assets against the speed of how money is depreciating. So I think like with what we've seen, cool thing about ETFs is that there's a lot of interest from self-managed super. So SMSF that obviously you guys know SMSF is basically you're taking the ATO's money that will be yours eventually, and you manage it yourself, right? So with that stipulation, an SMSF trustee has obligations to make sure that they have what ATO calls absolute entitlement. It's a bit of a word mumbo jumbo, but what it actually means is that you have to prove legal and beneficial ownership to the asset at all times. So one fun fact is that when FTX collapsed, a very big crypto auditor firm, a principal, called me and said that just realize, so I want to confirm that crypto on an exchange, the customer don't have legal and beneficial title to them, because look what happened to FTX. They can't get their money back. So I say, yeah. So what do you do? So it's like, we did a mistake. We admitted a lot of crypto SMSFs to store their crypto on exchanges, and the next day they sent out an email to basically say that you either have to take it out or sell it, or we're not going to do your audit next year. So, so from an ETF perspective, again, there's so much more tax, regulatory clarity, and all these questions. And frankly, for an SMSF, they should consider their obligation as a trustee a bit more seriously, because even though if the ATO doesn't enforce it right now, down the line, it will become a problem for them anyway. So always do the right thing from the start. All good. Thanks for the question, and thanks for attending this session.